Hey everybody, this is Jim at SP500chart.com. It is about 4:15 on December 18th, 2013. Thankfully, I'm back in Atlanta and able to do this from my office where things sound better and look better. And hopefully we'll make a little sense out of what happened today. Before we do, I just need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw these lines on charts, but you have to draw your own conclusions from your own research. And please make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look at the fun. Okay, starting out here on a 30-minute chart, here is our what we have been considering as a head and shoulders top. And you remember when it broke down underneath this neckline, it didn't seem to quite have the right behavior for a typical head and shoulders pattern. And that just kind of gave me pause. In defense of what we see here, we never did get to that 1% break below that line. Matter of fact, I don't even think we quite made, maybe we made about 0.5% underneath this line, but usually you look for a solid 1% move. Did not get it. So what happened today? Well, let me move this over to where you get a little bit better look at the price. What we did was we had quite a turnaround when the Fed came out and said, you know, we're gonna ease back a little bit on the bond buying, but we're gonna keep interest rates right where they are. And the market loved that news. We had from the lows of the day, which were at approximately 1768, we had a better than 40-point turnaround in the market off of that news. Now, what's interesting to note, if we forgot the news, just it didn't exist, and we look at this chart, what do we see? Well, yesterday I floated out the idea of two new lines, these two orange lines right here. And it's funny because I really wasn't trying to be prescient or anything about the what might happen today. I was just looking at this in terms of lines, and I said, you know, here's our last two bottoms, and here we've got a bunch of touches clustered up here on the week of the 9th, and then again this week, to where this looks like a significant trend line. And I just mentioned that, you know, I think if we get over this line, we should come up to at least challenge the highs that we've had up in around the 1810, 1812 region. And never in my wildest dreams did I think we would get that done in 2 hours. And yet that's what happened. So we broke out over this resistance, and now we closed at just a little bit over 1810. Just a remarkable day. However, to just add a little reality to this, we're still in the same range that we've been in for 5 and a half weeks, between roughly 1780s, mid 1770s, and the low 18 teens, very low, call it 1810. What's going to really make this an impressive move is if, and it's still if we see the S&P rally over its previous high and get up and set a new high that will probably lead to a move taking us out of this range up into the 1840, 1850 range as a target. Now, with an eye towards that possibility, let's throw another line on this chart, and we're going to draw it off of our last two tops, starting right here and going across. I'm going to massage that right where it should be and right across here. So we have a line over our tops of late November and the 9th of December. Let's choose a nice color for that. I tell you what, I don't see any dark blue, so let's make it stand out. You can see that the S&P closed by an extremely marginable, is that the word? An extremely thin margin over this line. I wouldn't say that's significant at this point, but if we get over this black line that is drawn over the all-time highs so far for the S&P, if we get over that by a technically significant margin, which would take something probably around 1820, yeah, it takes something up in the 1820s, because you're looking for about 18 points over that line for it to be technically significant. Probably, actually, to tell you the truth, probably getting out of this gray area right here over 1825. That's what would probably really bring home the idea that this move isn't just a move inside of our range, but rather something that eventually, or that is taking us out of this range. So again, looking at a 30-minute chart, you see that sure looked like a head and shoulders top. But the only thing is that when it broke that neckline, it just did not do so in the way that one would expect. The last thing I want to mention here is the fact that we bounced pretty much at that bottom line off of the lows for the day. So this now does look like just kind of a sideways consolidation after a breakdown out of this green channel. And perhaps we're going to come on up and do a nice, healthy, and full back test of this line wherever we might meet it in the future. That would be great. But the news is we are over this orange line. And the idea, if this was a descending wedge, the idea is that the wedge leads to an eventual test of the levels that were in place before that wedge formed. And if we look at this chart literally, then we would say when we broke over this line, we should have expected a move back to whatever levels were in place back here. And when we snap down our horizontal line, gee, as if by magic, here we are testing those levels. So, guys, you can't make this stuff up. It's just amazing how often this works. Now, going forward, I'm still looking for the S&P to break one way or another out of this range, despite the fact that we were up on the day almost 30 points, despite the fact that we had a turnaround day. Actually, you could say this was quite a massive sort of a, not exactly, but sort of an outside reversal where we had a low that was lower than yesterday and then a high that was much higher. So in other words, if we look at the daily chart and we just zoom in on that one candle, there it is. Pretty impressive stuff. But to really make it impressive, we need to get up over this entire range and get up into the 1840, 1850 area. That's when I would really stand up and take notice of the strength of this market. Right now, all we've really done, despite the impressive way it happened all in one day, all we've done is we've returned back to these same levels that we were before. Now, one thing that is pretty nice that I want to point out, zooming in a little closer, you will see that today was an all-time high for the close. Back when we made the intraday high in November, we did not close there. Back when we made this last high on the 9th, we closed underneath the level where we currently are. So this would be this little line that I'm putting up here temporarily at about 1808 and change was the previous record for a close in the S&P. We close marginally above that. So guys, let's just keep watching it, see what happens Thursday and Friday. Could this possibly just have follow through? That was such a violent move off of that bottom. Let's see what happens. So it was great that this happened, but again, all this really did was take us from the very low extreme of our range and put us back into the upper part. So let's get some more steam under this, get some more follow-through buying in the next week ahead. It may not all come at once. There may be a pullback, but let's see what we get if we can power up through this 18 teens area and get up into the 20s and 30s. Then we could see this market just keep plowing on ahead, at least until it shows us a clear sign that we're reaching a top. Now, I want to mention that Head and Shoulders still should be something even if this pattern fails, the fact that we made that pattern when we did is still indicative of some underlying weakness. So I think we need to be diligent as we always are. So look guys, thanks for watching. Take care.